it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, as of today, that account is sitting at $76,448.18. It's actually down by $84.45 since my last video, but with the entire stock market being down, at least as of today for this week, this is giving me the opportunity to actually invest in stocks on sale, which is exactly what I love to do as a long-term investor, and brings me to today's video, in which I'm going to be talking about the 5 dividend stocks for the month of September that you should absolutely be adding to your personal watch list. Now, this is to say that I'm not actually investing right now into these companies, but I do believe that they are undervalued and they're certainly on my personal watch list. So before we actually dive in, make sure you go ahead, tap on that thumbs up button, as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. Most importantly, if you haven't already subscribed, go ahead, tap on that subscribe button while you're at it. I would not only love for each and every one of you to be on this journey with me, but want all of you taking advantage of the $50 One Hope Wines gift card giveaway I have underway as we speak, in which one lucky winner, the moment this channel crosses 1,000 subscribers, will be sent that gift card to pick out the wine of their choice. Now, YouTube, with all of that out of the way, let's go ahead and dive right in. So in jumping right to business, the very first stock I want to talk about is Walgreens. That's ticker symbol WBA. Now, Walgreens is America's second largest pharmacy chain operator, just behind CVS. Over the past 12 months, it has seen explosive growth, up 38%. Now, a lot of that growth actually was all due thanks to the pandemic. Walgreens was a major player when it came to the vaccination rollout. And in the near term, we have the booster shots that are coming out and they're going to be on their way. And of course, Walgreens is going to be a major player in delivering those booster shots. But as a long-term investor, it's important for me to take a look at what exactly they have planned for. And we're going to get into that in a hot second here. But what I want to talk about is, prior to the pandemic, Walgreens was struggling with their online presence, especially with, say, Amazon coming out with a pharmaceutical segment. Now, that was almost detrimental to Walgreens. However, with the help of the pandemic and that vaccination rollout, they've experienced growth. And during that time, they've put together a plan for that longer term future to only continue to grow. Now, that plan comes down to healthcare clinics, in which Walgreens is going to be rolling out about 500 healthcare clinics, which should only help Walgreens continue to grow in that longer term future of theirs. Now, they have been a dividend player for 45 consecutive years, not only paying out dividends, but increasing those dividends. So of course, rightfully so, earning a spot on that dividend aristocrat list. Their current dividend yield is sitting at 3.72%, which is right in that sweet spot. Now, when it comes to their actual stock share price, we saw the stock pull back. It went from $56 to $51. But it has to come down to those analysts' expectations for me, because analysts are expecting that this stock is going to grow to a median share price of $52 and a high stock share price of $68, which places Walgreens on my watch list for stocks to watch in September. Now, next up on the list, we have Consolidated Electric, also known as Con Edison, ticker symbol ED. Con Ed has been around since 1823, so it is certainly not just going to disappear anytime soon. It is a utility play, and I would argue one of the safest utility plays that you can possibly invest in. They are serving over 3.4 million customers around the New York City and Westchester area. So again, just a utility play that probably won't be disappearing anytime soon, and one that you can throw your money into, kick back, relax, and just expect that, well, as long as people are paying their bills, we're gonna be all right investing in Con Edison. Now, when it comes to Con Edison's dividend track record, they have been paying out dividends for 47 consecutive years and increasing those dividends year over year, with their current dividend yield sitting at 4.06%. So an incredibly healthy and strong dividend yield for the dividend investor out there. But in the best possible news, their stock has actually pulled back from $79 per share to a current share price of $74 per share. And when I look at analyst expectations, this is what excites me the most. They're expecting that Con Ed is going to continue to grow, with a median stock share price coming in at $76 per share and a high stock share price of $82 per share. Next up, we have a pharmaceutical beast. It is by no means a company that is going to be disappearing anytime soon, that company being ABBV, ticker symbol ABBV. Now, ABBV was a spinoff back in 2013 from Abbott Laboratories, and since this spinoff, it has just done an outstanding job in terms of making a name for itself within the healthcare industry. It has experienced a ton of growth, and of course, after a 52-week high hitting $152, it has pulled back to $109 after the FDA came out with some restrictions regarding arthritis drugs. It has certainly impacted ABBV, which again just allows us to have an opportunity to invest in a quality company while it is currently on sale. But before I go any further in talking about the analyst expectations for ABBV's growth, let's talk about ABBV's dividend, because they've been paying out those dividends for 49 consecutive years, increasing that dividend year over year with a current dividend yield sitting at 4.66%. So talk about an incredible dividend investment opportunity. It is ABBV and it is ripe for picking. Now, when it comes to their growth in the longer term future, analysts are expecting that ABBV is going to continue to grow, with a median stock share price sitting at $127 and a high stock share price sitting at $148. Coming up on the fourth dividend stock opportunity on the day, we have one of Michael Berry's largest positions within his portfolio, that being Cardinal Health, ticker symbol CAH. Now, Cardinal Health is a healthcare solutions company helping many of their clients when it comes to cost effectiveness, whether it be in logistics, patient care solutions, pharmacy management, you name it. Cardinal Health is probably there to help their clients when it comes to that cost effectiveness. Now, Cardinal Health has actually been hit pretty hard during the last 12 months. They have had a reserves buildup of $127 million that they had to absorb, and then an opiate crisis of their own to deal with $149 million worth of fines. Now, all of those financial hits certainly took a toll on their stock share price. We can see it went from $62 down to $53. However, in terms of their dividend and why this is such a fantastic company to invest in is because they are, of course, a dividend aristocrat with 34 consecutive years of dividend payments and raising that dividend year over year, with their current dividend yield sitting at 3.66%. Now, in the best possible news, analysts are expecting that Cardinal Health is just going to continue to rebound and grow, with a median stock share price sitting at $56 and a high stock share price priced at $68 per share. And last but certainly not least, we have our one dividend king on the list. It is an incredibly defensive play, that being Colgate-Palmolive, ticker symbol CL. Now, Colgate was founded back in 1806. It's a manufacturer of oral healthcare products for the consumer. So anything from your toothbrush, toothpaste, floss, I mean, you name it when it comes to oral hygiene. Colgate-Palmolive is on it, and they are doing a standout job and just continuing to deliver through on those dividends. As mentioned, a dividend king, so paying out dividends for over 50 consecutive years while increasing that dividend year over year. Now, as of right now, that dividend is currently sitting at 2.31%. And while their stock actually pulled back from around $86 a share to $76 per share as we round the corner on this pandemic, a lot of investors are backing away from investing on these defensive plays, but this just presents a ripe opportunity to jump in on a quality company that's going to be here for a long time coming. Now, analysts are expecting that Colgate is only going to continue to grow, with the median stock share price sitting at $88 per share and a high stock share price of $98 per share, again, which leaves Colgate-Palmolive as an incredibly defensive yet safe play for the dividend investor. And that is it. There you have it, the 5 dividend stocks that I've added to my personal watch list for the month of September. Now, if you personally are looking to add any of these companies to your personal portfolio, just make sure you do your own due diligence prior to adding them in there, because I am by no means a financial advisor and you should never take any investment advice from a random YouTuber. However, if you've liked what you heard, you learned something new, drop comments below. I'd love to read through them and your thoughts on any of these companies. Of course, if you haven't already done so, go ahead, tap on that thumbs up button and help me grow the Blue Lion Finance channel. Moreover, if you've not already subscribed, go ahead, tap on that subscribe button while you're at it. Now, YouTube, until the next video, I will see you all there.